Good afternoon. It's great to be with you again. And we're going to continue with the seminar series. We're going to talk about life insurance today. We'll see how far we get. We may have to do another segment. First of all, what reasons do people want life insurance? What do they use it for? I've had people in seminars ask me, do I need my life insurance? And, how can I answer them without looking at their lives, what their needs are, their objectives, and what kind of life insurance they currently have? The basic reason that people buy life insurance, is to provide for beneficiaries when they're gone. And when you're raising children, people typically buy life insurance to make sure that something's there in the uneventful, occurrence of early passing. So that's the number one reason people buy life insurance. When they buy term insurance, we'll get into that a little later. But anyway, so that's one reason. Other reasons include investing, because some life insurance can produce cash, and that cash, when you take it out, is not taxable. It's not taxable because they structure it technically as a loan you never return, but the point is that you don't pay taxes on loaned money. Very important concept. A lot of people don't even realize that is in fact the way it works. So we'll talk about that as we go along. So the main purpose is to provide, these are my notes from the seminar, main reason to provide financially for your dependents upon your death. There's many types of life insurance, and we'll talk about that. Life insurance has a favorable and unique tax treatment that can be used to create more effective financial planning, again, because the money coming out is not taxable. It's a very big deal, isn't it? Okay. Selection considerations. Why are you getting the insurance? What are your objectives for purchasing life insurance? I'm going over this very briefly. Obviously, if you come and visit me, we go through a lot more, and I can help you. We have the right policy at the right price. Okay? We represent about 100 different companies. We can streamline the situation for you. I've been doing this for 25 years. A lot of experience, a lot of cases I've worked through, and we can do the right thing for you. So keep that in mind also. If you want to talk to me, call me at 410-902-0464. 410-902-0464. Let's go ahead. So what are your objectives? What are your financial obligations and lifestyle? Your age, income, and assets at this time? What are you trying to protect? As time passes, you may have more assets to protect. You may have more reasons for more life insurance. But let's take the situation the way it is right now. the age, the income, and the assets, and there's a variety of estate considerations. Think about this one that most people don't think about. In long-term care, if you don't have long-term care insurance and you expect your family to take care of you as you get to that stage of life, if you have life insurance, after you've gone, it can pay them back for their costs, expenses, and time that they serve your needs. So that is an interesting proposition, because that money coming out again is not going to be taxable. So that's a very beneficial way to look at the use of life insurance. That's obviously for later in life. And you start it, much later than you would for when you're getting life insurance as you're raising children. Okay. Life insurance needs and benefits. Living benefits. I've got a list we put together a long time ago, and those needs haven't really changed. If you want to create a cash reserve with tax-deferred money, tax-deferred money, so you do it. It's not taxable. It goes in and provides you with money that you're taking out later out of the cash reserves that is not taxable. That's a wonderful thing to remember. Again, I said you take money out of life insurance, it's not taxable. Provide additional retirement income. You can do that. You can take money out of cash values and use it for income. You could take money out of cash values and use it for long-term care. You can take money out of cash values and use it for anything. It's your money. Okay. Maximize your pension income. So you might supplement, if you've got a pension, you might supplement your income by taking tax-free money out of your life insurance policy. Very common practice. Very common practice. pay for expenses for, I said, for long-term care and hospice care and so forth. So a good solid policy can be a good solid savings account. It's there when you need it. It's not taxable. Of course, death benefits. So you're preserving the dependent standard of living. Maybe your spouse. You're paying. You can use it to pay estate taxes and settlement expenses. You can create an immediate estate. You take life insurance, and whatever that death benefit is now part of your estate. As long as you maintain it, you've got that as part of your estate. You're leaving it. It has a beneficial value to the beneficiary that passes through operation of law. At the moment you pass, it is now owned by that person that is the beneficiary or people that are beneficiaries. You can eliminate home mortgages and loan balances through the death benefit. So, somebody passes, their spouse wants to pay off the house, there you go. So you take all those things into consideration when you're buying life insurance. Equalize inheritance or beneficiaries. So, you may have a situation where you want to have a set amount of money that you want to leave, set amount of assets you want to leave a number of people, but you don't have that amount of assets to divide up equally. So what you do is you supplement it with life insurance. So the death benefit. So you had 3 people, you had 200,000 that each would get 100. Now you have a life insurance policy for 100. So each of the 3 gets the same $100,000. So there's lots of reasons to do these things. Or let's say you want to leave your, a charitable gift to your, church or temple or any kind of charity that you want to provide for. You can always do that too. So, and if you have a business with somebody else and you want to have a buy-sell agreement, it may be a situation where the life insurance pays the partner, helps buy the business or pay the business off, and so forth. So there's a lot of ways to deal with life insurance and the value of it. Those are just a few. This is a brief summary of what I put together and what I present in my seminars. Okay. Categories of life insurance: term insurance and cash value. Now, term insurance has no cash value. If it has cash value, it's not term insurance. So term insurance is typically 10, 20, 30 years. And the kind of term insurance that we sell is basically level term. What does that mean? That means that the cost each year is the same for the entire term. So if it's 20 years, it doesn't change during that period of time. Renewable insurance just means that you can renew it each year, but the cost could increase. Is term insurance right for you? You need a death benefit coverage only for a certain period of time. The kids are growing up, as an example. You can't afford a higher initial premium payment, so you buy term insurance. That can be a beginning. You can always do more later. You can always do a permanent life insurance later that has a cash value. You don't need to accumulate cash value or borrow against your policy. So that circumstance, you'd only buy the term. And types of term insurance, I mentioned level premium, death benefit, and the premium payments remain level for the entire term of the policy. So you got $100,000 death benefit, and your premium is whatever it is per year, per month, doesn't change during the entire term of the policy. Annual renewable. Now, this type of policy may be renewed each year, as I said before, usually with a higher premium due to increased risk of death. So the older you get, then obviously it's going to cost you more in this kind of product. Although the death benefit stays the same. So that's renewable, as I indicated earlier. So that can increase, typically does increase each year. And the decreasing term, although premiums remain level, the death benefit decreases each year since less coverage may be needed as you get older. So they all have different costs and all have different benefits and all have different reasons for being, okay? So those are things you want to keep in mind. Cash value insurance. So we covered term. Now let's talk about the kinds of insurance that have cash value. A cash value policy, part of the premium pays for the death benefit, okay? That stays the same, while the remainder is deposited into a cash reserve. So you're accumulating that cash reserve that later on you can use. If you die while covered by the policy, your beneficiaries receive the death benefit. While you still are alive, you may access the cash value. So we talked about cash value before. You can use it for whatever you want to. And remember, when it comes out, it's not taxable. Cash value policies are often referred to as permanent insurance. So you're talking about, whole life. You're talking about universal life. You're talking about index universal life and so forth. Those are permanent policies. They don't have a term that ends. The term ends when you pass, unless you surrender it. And of course, speaking of that, term policies are the ones that are most surrendered. That people decide they don't need it anymore, and they let it go. They lapse. Something like 60% of term insurance policies get lapsed. And the thing I tell people today is, before you lapse it, see if you can sell it. Because today, policies are bought and they're sold by the people that have the policies, and they're bought by companies that carry the insurance until you pass, and that's how they make their money. So the question is always, if you're going to let go of it, could you sell it? Because it would always be better to sell it than to just lapse on it. You don't want age restrictions for contributions or minimum required distributions like you do in a 401k. So you can put whatever amount of money you want into a policy, so it goes in, so you're building up that cash value. And you're not limited on that number. You wish to avoid contribution limits. I've said that already. Like you have in a 401k and like you have an IRA. You want the ability to withdraw the cash value tax-free. That's a big, 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 big deal. Especially later on when you're older, you don't want to have to pay tax on everything. And it doesn't add to your income to raise your taxes overall. So your marginal rate doesn't increase in your tax bill. This is completely tax-free. You may need to borrow, usually tax-free, from your policy. Well, technically, any money you're taking out of it is you're borrowing. That's the reason that you can get it tax-free, because it's loaned money. I indicated that earlier. You don't want the beneficiary to pay taxes on investment earnings due to tax-free death benefit. Very, very important. That's available. And we explain that more when you come to see us and we go on through it. The types of cash value insurance: whole life. A lot of people start whole life insurance, early on. They get married, they have a kid, or they don't, and they decide to start it then because that gives them a lot of time to contribute to it. It's a very smart move. Very smart move. It parallels your other investments. But remember, the money coming out is completely tax-free. So it's a very smart move early on. And I'm not going to go much more into that one. We covered when we see people. Universal Life is another product. Universal Life grows by a specified percentage. And but otherwise, it's very similar to whole life insurance. And then, of course, we've got other kinds of cash value insurance. Variable life. So variable life is a little different. You decide to invest cash value into the cash value. You may select from the investment sub-accounts in a variable life. They're very much like mutual funds, and they're going to grow and they're going to decline based on the market. So that's why they call it, variable life. And we can go into details, but that's also a very worthwhile thing if you're willing to take some risk. You may have a number of policies, and you could have one of these and one of these and one of these and so forth, and you'd have some risk in this one. So depending on how risk adverse you are or how interested you are in this kind of product, it may be right for you. And then, of course, variable universal life. So that's just a variation on the variable life, okay? But that's also a permanent insurance, and you can make the premiums flexible. So you're putting money into it in different amounts at different times. I'll give you more when you come to see me. Okay, remember, we got the right policy and the right price, and I've got 25 years experience at this. Call us. We'll find a way to meet your needs. 410-902-0464. Remember, Mike Newmeyer, 410-902-0464. And we can show you how to compare all the different policies. And when you come in, if you want to talk about a certain kind, we can show you what all the different carriers are charging. We have no favorite carriers except that we show you how they're rated. We always want to deal with the best rated companies. We always have. That's the safest and best thing to do. And survivorship life is another form of permanent life that's there. Second to die is what they sometimes call that. I'll go through that with you. And then, so finally, there's a lot of different kinds of life insurance. We can't lump them together. We can't say they're all the same because they're not. They have different purposes and different costs. When you come in, we're going to look at you. The insurance company's going to look at you. They're going to say, are you a smoker? Are you a non-smoker? They're going to want to take urine and blood tests and so forth. They want to know you're breathing, and so forth. But those are minimal kinds of exercises to get approved. And it doesn't take much time, but you can get it issued in less than a month. The most highly rated companies take more time, but that's to your benefit because the highest rated companies have the most benefits. Okay? And if you're in good health, there's no issue. So you might as well look at those. Doesn't mean necessarily it's going to cost more. Very interesting to me. I've learned this along the way. Some of the best companies are no more expensive than the ones that are rated less. So we try to get you the best that you can get at an affordable price. Remember, the right policy at the right price. Mike Newmeyer, 410-902-0464. Call me. Come on in. Let's talk.